This is Charlie giving you Monday's market commentary. Hope you're very well. Sorry, apologies for the slightly rough voice. Kim and I were teaching all weekend to a level 1 course to beginners and new traders, and so I lost my voice slightly. Now, I've brought up the Nasdaq here, so because if you remember, probably a year or more ago, I talked about the Nasdaq, saying that I suspect that it's on a course now to finally break those highs of 99, 2000. Way back, the Nasdaq had the tech sell-off that took place in that early 2000s bear market. It was taking all of this time to finally approach those highs. We're still not there yet, but looking out towards 2015, I suspect that we are going to breach those highs on the Nasdaq. So obviously that's a fairly straightforward call, but remember I talked about it a good year or so ago as well. And so, what does that actually mean if we're going to some of the broader indexes, such as the S&P 500? Well, when we look at those, we've broken to new highs now. So let's actually take this to maybe a monthly chart. No, not yearly. Let's take it to a monthly chart. There we go. We have broken to new highs on the S&P right now. And I think when we breach those, we had this pullback here, obviously in the last month, but the fact that we've broken some new highs, you have to respect the market. So I keep on getting asked by people, when's the S&P next going to roll over and the Dow next going to roll over? And you respect the markets when they're making new highs. And so don't get me wrong, there are times where they're making new highs, but they're only marginal new highs before they next roll over. And of course, if that was to happen again, then I would certainly look at these markets. But I think if we go out to next year, then the potential is there for these markets. If the Nasdaq's going to new highs, it probably will be mean that the likes of the S&P and the Dow will be continuing to make new highs as well. So I just wanted to go through that as a big picture view. That's not talking about from week to week that the markets can't pull back and do retracements and everything else. I'm talking about big picture, general picture, that if the Nasdaq is going to be breaching those highs of 2000, which I suspect at some point it will do, then when that's breaking up to new highs, these markets will also be breaking to yet new highs again. So just some food for thought there. Secondly, I just want to have a look at the dollar index here. So the dollar index measures the dollar against a basket of other currencies. The largest currency that it's measured against is the euro. But as we can see here, I've actually taken this out to a quarterly chart. So each one of these candles represents 3 months. And as we can see, right away back from early 2000s, when the dollar index was right up here, it's obviously had its own bear market to contend with, and has subsequently been making higher lows here. And so I think that it's on course for breaking above these prior highs back from 2009 and 2010. So overall, if the dollar index is expected to rise, which is what I would overall be expecting, then that means that the currencies measured against the dollar, so the euro dollar, the pound dollar, and Aussie dollar, and all these other currencies, should continue to be under pressure in the big picture. Remember, this is a quarterly chart, so obviously when you come down to a daily chart, and we actually take it into a currency, for example, then as we can see here over the last couple of days, the pound has been moving up, so against the dollar. So whereas what I'm saying is actually, if the dollar itself is going higher, then what we will over the longer term see is a likelihood of the likes of the pound dollar and the euro dollar continuing their downwards trend against the dollar. So the euro should continue to move lower, and likewise with the pound and some other currencies. But obviously, like I said, that's a quarterly chart there I was looking at. That's the much bigger picture. And so the much bigger picture for the dollar is positive for the dollar, and less so for these other currencies that are measured against it. In the very short term, though, for us as shorter term traders, what does that mean? Well, I think it probably just means for us to be aware of the overall trend, which we are. Obviously, there could be bounces at any time. and larger retracements, of course, but it's any larger retracement is still going to be within the context of that larger trend that's taking place. So that's what we're seeing there, is the that potential for the dollar index to carry on breaking to new highs as the quarters go by. But obviously it's not a one-way street. There will be retracements as well, and so that would mean that likes of the euro dollar here will see retracements, so where the euro strengthens. But let's just always remember that overall, until proven otherwise, there's a broad move going on there in the dollar, and so therefore the euro dollar especially should continue to move lower over the next year or so. But like I keep saying, it should have some retracements along the way as well. So don't think that it's just a one-way street. It will have rebounds. Okay, I think I'll leave it at that today. So very much big picture stuff. Just some ideas that I had in my mind there. I just wanted to get across, and be back for short-term trading on Friday.